Good morning, and once again in another Friday, I'm seeing you all on continuation of the mock paper 2 of the questions of ACCA financial accounting, the basic one. And today I'll continue with question number 23. A company is preparing its statement of cash flows for the year ended 31st December 2012. Relevant extracts from the accounts are as follows. Statement of profit or loss, some extracts given. Depreciation 15,000, profit on sale of non-current asset 40,000. Statement of financial position, they have given you the cost and the associated accumulated depreciation for the plant and machinery cost, plant and machinery depreciation. The plant and machinery additions during the year were 35,000. What is the cash flow arising from the sale of non-current assets? Let's work out. Now what you really have to do is that first what we do is we open a T account, the cost account, that is for the plant. They have given you the information here. The cost, opening balance 250 and closing balance 185. So 250 here, opening balance, and the closing balance 185. And then also they have given you accumulated depreciation. So we'll take that as well. They have given you opening balance as well as closing balance. So the opening balance for accumulated depreciation is 50,000 and closing balance 45,000. So 50 and 45. Now what they say, depreciation during the year 15,000. So the double entry for that would be you have to debit depreciation expense and then credit to accumulated depreciation. So depreciation 15,000. And then further what they say, the profit or loss on disposal of non-current asset is 40,000. So what you must do now, you should open another T account to find out the disposal or the profit or loss on disposal. So disposal account. Next they say there is a profit of 40,000. So you credit the P&L and then we debit here. So this goes to profit and loss account. And what other information we have? Plant and machinery additions during the year 35,000. So that will be coming here. So we purchased additional asset. So the cost of that new asset that we purchased was 35. So we have 35 here. So let's first balance this. So 285, 185, that means 100, and this is the asset that we disposed. We also need to evaluate before we balance this. One more thing you need to evaluate whether any revaluation surplus is given in the question. If the revaluation surplus is given in the question, then we need to incorporate that. But in this question, that has not been given, so no problem. So we can continue. So this 100 should be debited to disposal account. So here we say the cost of the plant account. And then as well we need to balance the accumulated depreciation account. So 50 plus 15, 65 minus 45, so 20. 20 is the related depreciation for the asset which we disposed. So we transfer that to the disposal account as well. So that accumulated depreciation 20. So when you balance this, here 140, here 20, so the cash we received will be 100, 140 minus 20, 120. So the cash we received on the asset disposed is 120. What is the question they're asking? What is the cash flow arising from the sale of non-current asset? The answer is 120. So that is the third one for the question number 3. Question number 4. Which body is responsible for issuing international financial reporting standards straightforward International Accounting Standards Board. So no other option or alternatives to think about. Straight away you can take the answer number 3, IASB in short, or in full, International Accounting Standards Board. And question number 25, T company acquired 95% of the ordinary share capital of M company at 31st December 2080. So what important here is that, so you have to find out the date of acquisition. So the date of acquisition is 31st December 2020. And then what they say, the acquisition is 95%. So the 95% parent company acquired, so 5% belongs to NCI, non-controlling interest shareholders. So it belongs 5% to them. So what we do now, they say return earning at the 20x0. Anyway, let's read the question. 700 and then 2021 800. Revaluation surplus for the during the year 200. The fair value of the non-controlling interest in M company at the date of acquisition was 45,000. Question is, what is the amount reported for non-controlling interest in the statement of financial position of the T company as of 31st December 2011? In order to answer that, what you have to do is, we have a few items here. So they are asking actually NCI. First point is, at the date of acquisition. At the date of acquisition, the NCI valued as 45,000. So that's fine. And then we have two equity items, retained earnings. Retained earnings, what they say that, there's at the date of acquisition 700, at the balance sheet date 800. So we need to find out the post-acquisition retained earning, 800 minus 700 into 5%. So 800 minus 700 is 100, 5% of that is 5,000. And then we have revaluation surplus. If you see the revaluation surplus, we don't have at the date of acquisition, so we only have at the balance sheet date. So all are post-acquisition, so that is 100, and the NCI percentage is 5, so that again 5,000. So the total answer will be 55,000. So that is the answer for question number 25. Then question number 26 here. Identify by selecting the relevant boxes in the table below whether each of the following statement is correct or incorrect. AZ owns 25% of preferred non-voting share capital of BX, which means that BX is an associate. Please note that to decide whether it's a subsidiary or an associate or an ordinary investment, what generally we look into the ordinary shares. We don't worry about the preference shares. Accordingly, so having 25% of the preferred share capital will not anyway mean to say that it is an associate. So answer is incorrect. CW has a 10% shareholding in DY and can appoint 4 out of 6. Note this, 4 out of 6 directors, meaning majority of the directors can be appointed by the investor company towards investee company. That means investor CW has control over the financial and operating policy decision making process of investee company. Accordingly, the CW becomes a parent and DY becomes a subsidiary regardless of the monetary percentage of shareholding ownership. So answer, they say, is classified as subsidiary. Obviously it's correct, so the answer is correct. ES has significant influence over FT. So meaning of the significant influence is that the investor company has participative interest in the decision making process, and their investment percentage in terms of numerical calculation between 20 to 50, and so it is by one way of defining associate is to say that you have significant influence. So FT is an associate of ES, correct, answer is correct. And the last one, GR owns 55% of share capital of HU, but by agreement with the minority shareholder does not have control or significant influence over the financial and operating policy of HU. So HU is simple investment in GR. Obviously that answer also correct. So first answer is incorrect, second, third and fourth are correct. What about this? 27. Which, if any, of the following journal entry is correct according to their narratives? Debit B, receivables ledger account debit, irrecoverable debts credit 450, irrecoverable debts written off. So that answer is wrong. So number 1 is wrong. So investments Q ordinary shares 100,000, share capital 100,000, 80,000 shares of BC 50 cents issued at 125 in exchange for shares in O. So now we have to find out. Now we see 80,000 50 cents shares. So when it is 50 cent shares, that means 40,000 will be the share capital. The remaining should be share premium. So even if you multiply 80,000 by 1.25, you are getting 100,000. That's correct. But it should not only be share capital. You also need to take, so different 60,000 should be share premium and 40,000 must be share capital. So answer number 2 is wrong. So suspense account 1,000, motor vehicles account 1,000. Correction of error. Debit side of motor vehicle account undercast by 1,000. Now if the debit side of the motor vehicle account is undercast, then we need to increase. So we should be debiting, but whereas what has happened here, they have credited motor vehicle account. So that means if you do that, again the total will tend to go down. So answer that also wrong. So question is, which, if any of the following journal entry is correct according to their narratives? None of them. So answer 27, first answer, none of them. Let me see question number 28, what they are asking for. J Company values inventories on the first in first out basis. J Company has 120 items of product A valued at 8 each in inventory on 1 October 2019. During October 2019, the following transaction in product A took place. What is the closing balance on the inventory account on 31st? Now see, you need to note what method of inventory valuation. They are using FIFO method. So when they are using FIFO method, so let's work out this. So what you do really here. So I have opening balance 120 units, 8. So 120 into 8. So that is, I guess it is 960. Let me use calculator here. Yeah, calculator. 8 into 120, I'm getting 960. That's correct. Now then what happens? We purchase 180 items at 9. So 180 at 9. So 180 into 9. So that is 1620. So that means plus 960. So 2580. The total is 2580. The next one. October 4th, we do a sales of 150 items. Please note that when come to sales and when come to inventory valuation, we really no need to worry about the selling price. Only if the question is asking about calculating gross profit, then only we have to work about it. So now here, since we are using FIFO, these 150 items, we should see how we issue. See, I have already 120 and then here I have 180. But now I need to issue 150. So that means first I will issue 120 at 8 and then 30 at 3. So 120 at 8 is 960 and 30 at 3 is 90. So 2580 minus 960 minus 90. So 1530 is the closing balance. So this 12 items, is it 12 or 1 minute? 150, not 12, I'm sorry, yeah, 150 items. So here, that's gone. Then, but they want. And October 8 again sales 80 units. Now note that I have completed all this. And then on this, now I am left with 150. Now again I need to sell another 80. So still from this 150 I can sell 80. No problem. And the price, oh no, there's a, sorry, there's a mistake over here. Let me correct. Let me go back to the second item, 150. 150 I need to issue. So this 150, what I will do, 120 at 8 and then 30 at 9. So 30 at 9 is, let me calculate, 30 at 9, 270. Yeah. This is correct. Sorry for the trivial mistake which I have done. So now work out. So 2580 minus 960 minus 270. So I'm having here 1350. That's the closing balance. So now 150, I have 150 here, and then now the next transaction. What is the next transaction now? Where is that now? Let me open. Yeah, the next transaction is 80 items. So I need to issue 80, but still I have comfort to issue 80 from this 180 collection. So this should be 9. So that is 720. So that means 1350 minus 720, 630. So in this I am left with 70 now. Then what they say? 18 October, I purchased 300 at 10. So now I buy 300 at 10, that is 3000. So 3630. And then what happens? 22 October, I sell 100 items. Now remember, if FIFO, so first I need to use this 70 and then another 30 from this 300. So I will use 70 at 9. So that is, I believe, 70 into 9, 630, and then 30 into 10, that is 300. So 3000, answer is 2700. So this is the answer for question number 28. With this, I conclude my continuous discussion on this and await for the remaining question in my next video. Do share and like it and share with your known ones and who will benefit of these videos. Thank you so much and stay tuned on my YouTube channel.